One. I forgot how we start these. David, how are you?
I'm doing great, Ron. How are you doing?
I'm doing well. I'm glad we're doing our podcast number 2, our high volatility podcast number 2. It's been too long. We're in the middle of kind of a crypto downturn. I think everyone's using the word crypto winter again. I refuse to say it's a crypto winter, but wanted to kick off there, get your thoughts and talk about topics.
Sure. Well, look, I think there's a lot of opportunity here right now and a lot of, there's a lot of cross currents going on.
Yeah.
I think you're seeing on one hand, a lot more adoption, and you're seeing more larger players get into the crypto space. And at the same time, you're seeing this sort of, you're seeing prices constrict a little bit. They've kind of come back from the highs that we've seen, and they've sold off quite a bit. And we're really seeing like kind of a classic retracement, like around sort of a 50% retracement in some places. And we're seeing the asset prices kind of hug certain lines that we expect to see. And so it's not surprising to me that we've sold off, and we're at a very interesting point right now.
Yeah, it's funny. And I wanted to get your thoughts about this. Coming out of the Wall Street background, when I see these very high highs, you expect the retracement. We expect, a little steam to come out of the balloon, so to speak. And I think there's always this overreaction to some people. Do you see the crypto asset market that kind of same way? It made sense to see some money get taken off the table. It made sense to see, we don't have PE multiples to compare, for example. But when you see the rapid price rise, and what was the Doge high in May? Something like 70 cents or something, which crazy. Now I think Doge is something in the 20-cent range or something. You almost expect that. Do you see it the same way, or is it more cyclicality around leveraging the cryptos, using the cryptos?
I see it as a little bit of both, but I see it as, in many cases, it's really, when you're looking at it and you see this big growth, and we hit 60,000, 64,000 very rapidly. Yeah. And it was not sustainable in the sense that there were people and institutions who had really large profits. And at some point, people will take profits. And it tends to be the more disciplined traders or the institutions that will take some profits. And unfortunately, the retail folks tend to be the last people in the door. And so I think what you saw here was a lot of people who had a lot of profits on paper, and we became overbought. And so this was a time where people saw an opportunity to collect on that, and they did. Yeah.
And I wanted to let's talk about something that a lot of people have raised as well. When we watch the kind of decline over the past, call it 60 days or so, everyone's throwing around the deleveraging aspect of it, right? There's an unbuckling of leveraged positions. What are your thoughts? Talk about that a little bit. For those, who are watching this and may not be deeply familiar with those kind of highly leveraged positions, what does that unwind mean, and how did that tie into the price declines?
Sure. And that's a really important point, Ron. So in the first instance, people are borrowing money and leveraging their holdings to be able to buy more crypto. So depending on the platform, they're leveraging 1 time or 3 times. And what happens over time is that you have margin. And so at some point, if the market moves against your position, you either need to put more cash in to support your position, or the positions can get unwound. And so what happens in crypto, because the moves are so rapid, in some instances, people can't cover their margin in time and their positions get liquidated. Or people don't have the fiat or the assets to cover their positions and they get liquidated. And so a lot of what you see are these sort of cases where a lot of people are stopped out of positions, whether they're short or long. And you see this acceleration because as the market declined, there was forced selling for people who couldn't cover their margin positions. And therefore the market declined even faster. Right. And then that sometimes can work in the opposite way, where if people are short and then they're forced to cover, they have to go in the market and buy. And if there are a lot of people having to buy at the same time to cover their shorts, you see an acceleration in the price. Right. But I think it's healthy that there is leverage. And I think it's healthy that there are times where there's more leverage and less leverage. I think ultimately we're better off if there's less leverage in sort of the aggregate, because then you don't have people who can't cover positions and who are borrowing beyond their means. But having some leverage is healthy, and we see that in traditional markets.
Right. And in the traditional market space, I think one of the things that is missing from crypto, but is rapidly developing, and I'm sure someone will tell me I'm wrong, but for example, there's no sense of being able to have the instruments to do the downside insurance. Right? When you're looking at equities and you see gigantic sell-offs,
Yeah.
particularly at the institutional level, someone bought puts to get out at at prices that don't force liquidation. A lot of those tools don't yet exist. And I'm sure there's some more exotic players in the space that allow that, but that's part of the issue as well. Like that some of the built-in tools that traditional markets would use still aren't available yet. Do you see it the same way as well? And do you think that's kind of part of the evolution of this marketplace?
So I do see it the same way. And I think part of it is it's twofold. Is there is a subset of institutions, and I think the majority offshore, who really can access a full suite of margins and futures products, excuse me, not margin, but futures products that are not really accessible to many institutions in the US, or very limited flavors.
Yeah.
And then I would say on the retail level, there are very few options. That's funny. Very few options to buy or sell options for crypto for retail people in the US. And that's unfortunate. I'd like to see a robust, easy market the same way you could with a stock here in the US, and hopefully over time that happens. But right now, that's not available to people and to the majority of retail and a lot of the institutional people.
Yeah. And, that really, those tools are some of the things that smooth out the volatility of traditional markets. And that's the hope from the folks engaged from a professional perspective in crypto assets, that those tools, again, smooth out the volatility. And I think that gets lost sometimes in the public conversation. Let's talk about the institutions, though, because you do a lot of research, as do I, as do many of us within the Wall Street Blockchain Alliance. One of the things we often hear about is the outflow from exchanges, which is almost always pointed to as big institutional moves, either participating in dealer desks or taking some money off the table to trade peer-to-peer. What are your thoughts there? Are those valid indicators? Like, how are you watching that institutional flow?
I think they're very helpful. I mean, if you see, I don't have a chart in front of me, but if you see a correlation with a lot of digital assets being taken off the exchange, in a literal sense, it means that there's less assets that can be traded or sold. So typically, if you want to, if you have a position and you're looking to hold it for the longer term, you can take it off exchange. Whereas if you're looking to sell right away, it doesn't make as much sense to be off exchange. As long as you feel from a security standpoint, it's fine, because you want the opportunity to be, make a move with your assets if need be. So I do think it's a good indicator to look. And I do think that if we looked at charts and had them available in front of us, that we would see that there are real correlations with when assets are moved off exchange, it's usually bullish. And when they're moved on exchange, it's typically bearish.
Right. And we have, the WSBA has a partnership with Brave New Coin. We'll bring charts, I think, into this conversation and the High Volatility podcast later, David. I think at some point that'll be very, very useful for the discussion. And there are others who really publish some research around this. Anthony Pompliano, who we just know from media, does a good job of analyzing some of these. So for anyone listening, those are good places to start. What about the DeFi space? I really want to start focusing on a lot of the conversations we have are around the things around staking, for example, and leveraging different platforms. And you've done an amazing job publicly, because you talk about this all the time. Test out the tools.
Yes.
Test out the platform, try the app, and certainly put de minimis amounts of money to play around with it. What are you looking at when you do that? Like, what are your thoughts about that whole kind of ecosystem and dynamic?
Well, look, I think it depends. Look, all of it depends on your risk tolerance. But a lot of it starts with, are the user interfaces intuitive enough that you're comfortable using it? Right. So if you're not comfortable, like, knowing that what you're doing is actually going to work, that's probably a good sign that you probably shouldn't be using that platform. So a lot of times I think that, security, making sure that the smart contracts are audited and they're not having breaches, But I really think a lot of it comes down to, what's your risk tolerance? What is the potential you have for gain? And how do you see, you should have a plan. Like, do you want to do this in the short term? Do you want to do it in the longer term? And really think about, like, what is the yield you're trying to gain, and find a platform that you use that you're comfortable with.
Right. Right.
And what's really interesting is some of the platforms are now becoming institutional grade, where they're putting in, an ability for institutions to use the platforms because they're tracking the flow of funds in a way that make them institution friendly. Now, that's a very interesting point, because part of DeFi, I think, in some ways is sort of freewheeling and not sort of so, I don't want to say censored, but not so structured in the sense of that kind of flow of funds and things of that nature. So in some ways, I think some traditionalists might have some blowback against institutional DeFi, but I think for the growth of the market, it's important to have.
Yeah. And a lot of I've followed your advice, right, and used different apps. I will say this though, some of them are very well structured from a UX perspective.
Yeah.
Some are very clunky, without naming particular apps and particular platforms or names, but do that homework, right, is always kind of the key there. You mentioned something that's really interesting though, because I think a lot of people, and I think it's critical, and I think a lot of people don't focus on it or don't know how to. If we're talking about DeFi, you talk about auditing smart contracts and the need to make sure that the software is viable, does the job, doesn't have major cybersecurity loopholes. That's beyond the purview, right, of most retail folks generally. Yeah. But how does that work? Like, from an industry perspective, what are you looking at, or do you know anyone who's actually looking at the audit of smart contracts in DeFi?
Well, at the bare minimum, I think it's good to see who's doing the smart contract auditing, and looking for players that are really experienced in the space, that have done them before, and who seem to be reliable. I don't think we can expect retail folks to be doing deep dives on security audit providers and things of that nature. I think that's beyond the expectation, but I think there is a level you can do. Between Twitter and Google, I think you can find out a lot of information if projects have had issues, or people are talking about issues. So I think there's a base level of due diligence you can do pretty easily to get a sense.
Right.
Obviously institutions are doing a much deeper dive on that, and have more resources to throw at it. So I think the combination of the two is sort of a good way to take a first level approach.
Yeah, and I think a lot of people don't realize that they have those resources available. And so, by way of example, again, not naming the platform, there was some overseas platform, and you look at their webpage and you scroll down, it's like, we are an officially licensed broker, or something like that, or some very generic language that's not substantiated with license numbers, which is not substantiated with any kind of registration number. But then you go look at some of the reputable ones, you can literally look them up. So, for example, those registered with NYDFS, New York Department of Financial Services, or the Treasury as a money services businesses. So, to your point, it's a little legwork, but the security of mind and the minimization of potential cybersecurity risk, I think, is really important for potential investors.
Yeah, yeah. But like you highlighted before, Ron, it's really important, for people to test them out, and really, just put a little bit on and try it out and see if it works. I mean, I'll tell you, without naming names, there are a couple of platforms that I just cannot use. Like, right. I feel like I'm sophisticated in the space, but there are a few that are just mind-bending as far as I'm concerned, and there's just too much work you have to put in, and there's too much room for error to put anything substantial on them.
Yeah.
And it's their choice. I think they must know that these are difficult to use, and they're really just looking for a certain segment to be using them. So I think they're well aware. I think they either struggle with, coming up with a better UI, or, they may not care on some level.
Right, exactly. And some of them may not have anything remotely resembling customer service.
And
that hurts some retail folks sometimes.
Yeah, it does. It does. I mean, look, I think one of the great things about DeFi is that just the ability to swap multiple pairs of tokens is just really powerful. I mean, how interesting would it have been if in the stock market years ago, you could just swap 10 Apple shares for 10 IBM shares, or vice versa, or whatever it is that excited you, instead of having to make multiple hops. I think it's such a great innovation. And, I think it's super exciting part of the ecosystem.
Agreed. I want to talk about one more thing in the yield farming space. And I know I'm monopolizing the questions, David, so I don't mean to do that. But I also want to go back to DeFi from a regulatory perspective, because I think that's worth the conversation in the High Volatility podcast. But let's talk about the yield farming stuff. I had an interesting conversation with some colleagues at our legal working group not too long ago. I think you might have been there as well. And there was this conversation around the rates that some of the platforms have been paying to stake are some of them are dropping precipitously. Yeah. And for me, you could look at that as the rationalization of an industry as more volume comes in. It's a challenge to be able to continue to pay those high rates. Maybe a token borrowing is down. What are you seeing there? Is that actually the case, and why those rate drops? Because some of those APYs were astounding.
Yeah. Well, I think that's the law of big numbers. You can't sustain that. But look, I think for different platforms, returns were a way to get people to trade on their platform, to bring people onto their platform. You can almost view it as a marketing expense. So I think at some point, when you look at some of the DeFi platforms, they wanted to get eyeballs, they wanted to get people on their platform. And, over time, they just reduced their rates to a level that they feel is sustainable, and it makes sense. Like you said, it's a maturing market. I think there are some places where you can still get outsized yield, especially compared to what, savings interest rates are, or just, interest rates are for, traditional products. Again, it's just calibrating the risk. Right. But I mean, one thing is that, I'm not as big a fan of stable coins as others are for purposes of yield farming, but there are a number of regulated places where you can get fairly sizable returns for holding stable coins. Right. And so, if you're of the view that like a USDC is very safe, it's backed, what it's backed by and who it's backed by, there are opportunities to get high single-digit yields, and maybe in some places double-digit yields for holding, cash equivalents. So, if you feel that risk is small and you want to chase yield, it's a much safer way to do it on the spectrum of yields.
Yeah, this is where I interject what I should have said at the beginning, David, which is our usual disclaimer that none of this is investment or financial advice, nor legal advice. For anyone who does watch this, please do your homework. And you said something that's really interesting as well, like the regulated exchanges. There's enough of those where folks who do get involved in this space, and again, this isn't advice, but I tell family and friends, don't send money to XYZ exchange in some foreign country, someplace where you can't check, some of the regulations that they have. So I would say stick to the regulated platforms where you can.
Yeah. So again, I should say these are all my personal opinions and not the folks that I work with, but and employed by. But what I will say is that I think an issue that we still have to resolve is that there are tokens that people want access to that they can't get access to, either unless they use a DeFi platform or go overseas. Right. And so I think the regulatory construct needs to evolve to enable people to get access to these tokens, because a lot of times they're going to these sort of second, I don't want to say second tier, but they're going to these offshore platforms because they want access to certain tokens, some very large, that they can't get access to in the US. I'm speaking mainly to US residents. So, it's a bit of a conundrum. I'd like to see an evolution where either there's a view that these tokens have evolved, or that there's some grandfathering in, or some structure in place so that more tokens can be made available to people and in the US and on regulated exchanges.
Yeah, and look, let's, if we're going to be candid about it, there's a not insubstantial portion of the crypto ecosystem that Americans are simply prohibited from participating in.
Yes.
And I get the risk parameters, and I absolutely, as an organization, the WSB, as you know, David, absolutely looks to sensible regulation to protect investors. But there is this sense that the innovation in the space is underappreciated, and you see this in the conversations. What was it, about a week or two ago for some of the congressional testimony? When you listen to some of the conversations with the folks making the laws, a good portion of them still don't get it. One congressman recommended he'd rather his citizens in his state and his area invest in the lottery than invest in crypto, to me, which is very short-sighted.
It just feels like there's a factual disconnect between where the industry is and what we're hearing, from Washington. And I think one of the things that we can do as a group collectively is help bridge that gap. I'm not quite sure why the facts, are so much an issue when some of them are very sort of concrete. But it's my hope that, some of the associations that represent, crypto companies and interests in the crypto space can help educate, inform, and drive some of the policy, because there are just things that you hear and you read that just aren't consistent with what is going on in the space.
Right. Fully agree with you. Let me ask this question again, not that any of this is a recommendation or investment advices at all, but you are a subject matter expert in this space. And when you look at these tokens, you also look at use cases.
Yeah.
What are the more, you can or don't have to name a token, but what are the more interesting use cases that you might have been looking at lately?
Well, scaling is such a big issue. And the ability to do more transactions on a blockchain is to me really important. So I am a big fan of Ethereum. I think there are some other networks. Polkadot's really interesting. Matic is really interesting. So I think those networks that are able to scale transactions, enable more transactions to be done on the blockchain, I think are inherently kind of interesting to me. I'm a fan of DeFi, so
I do.
I'm not shy about my liking Uniswap and several of the other decentralized exchanges, because I think Uniswap has continued to evolve and their UI is just really easy to use.
Yep.
I'm also a big fan for logistics and using blockchain to track shipments and using tokens to track shipments and things like that in terms of currency. And so that's another use case I'm a big fan of. So look, I think there's some real, again, we're not giving investment advice, but I think there's some real opportunities here with this retracement to look at some bigger tokens or even smaller ones that think that have retraced a lot, that we believe in as a blockchain, and take an opportunity maybe to build a position in it.
Right. Yeah, absolutely. And it's funny, I as much as I often hate to admit it, I think you and I are often chart watchers in some respect. So we'll see things like death crosses and 200-day moving averages. Can you talk a little bit about that? Do you look at that on a regular basis? Do you, from your own personal perspective, is that useful?
I absolutely look at the 200-day moving average, and I look at other sort of, different, macro charts, because it's amazing how you look at some of these charts and the prices or the total market caps bounce off of these support levels. And, there are some people who do this full time for a living who, may have different views, but I think they're very instructive, and it's a good guideline to sort of look at and look at the history and see where they're moving. Like this 200-day moving average right now, we're hugging it. Either we've been above it and right now we're below it. But, true to form, the prices really do kind of migrate to these traditional base marks and benchmarks that we look at. And I find it super instructive. And, I'll say again, this is just me personally speaking, but I was a buyer of Ethereum today. I think Bitcoin is priced very well here.
Mhm.
And I also, think Polkadot's priced very well here. So, those are a couple that I think, again, no investment advice, just sharing in real time things that I'm seeing and doing.
Yep. And I think one last point to that, and hopefully you agree. A lot of the momentum trading focused on meme stocks and meme tokens, and everyone will pile on to Robinhood, waiting for the next Elon Musk tweet about something Doge related, for example. That's not what you're focusing on. You look at this from a macro perspective and from an investor's perspective, correct?
Yeah. Look, I'm not a day trader. I don't have the luxury of that kind of time. And look, there are probably successful people who have figured out with these meme tokens, a way to play them and are doing well by them.
Yeah.
I feel like with the meme tokens, you have to know something people don't know.
Yes.
Or just really be willing to buy 10 of them and maybe one or two of them really, blow up in your favor and, you make outsized returns. But yeah, I think there are people who are probably doing great with them. It's not something I, focus on.
And that goes back to risk tolerances as well. You and I are at an age where I'm probably not throwing boatloads of money at meme tokens and waiting for Elon to tweet something.
Look, I mean, I don't personally, but look, some of the meme tokens have done really well for people. I mean, there are people who, got into Doge very early and have done well. And, look, even, if you look at Shibu, that started as sort of a meme thing, and now they have a Shibu swap.
Right.
So, again, some of them can evolve into something more meaningful. And look, there's real utility with Shibu there, with the Shibu swap that you might not have thought you would see. So, and there's a possibility that Dogecoin grows as a payment rail for some sports. Maybe I don't have any knowledge if Elon Musk plans on having Tesla accepted at some point, but
Yeah.
there are like use cases that evolved out of them. It's just in the aggregate, the majority of them are definitely on the fringe.
I agree with you. And Dave, we've only got a couple of minutes. I want to raise one thing. We should probably do a dedicated segment to it at one point. But is the NFT bubble, has it burst and is it done? Or are you tracking anything in that space? Any thoughts about it?
It feels like to me that it's in one way it's maturing, and in another way, there's this constant just stream of product that's coming into the market, so that just the volumes of new products are, growing. And I think the frothiness has gone down a lot, and I think you can see it in the prices. And I think people were really just buying anything to flip them. And now I think people are being more discerning. And look, I'm sure there are some hot NFTs that are being bought to flip, but I think the air and some of that has gone out and it's sort of repriced itself.
Yeah, but I would argue, though, I agree with you, but I would argue NFTs as a proposition, as a use case, makes sense in many regards.
Yeah. Oh, I agree. Look, I think they're fascinating. I think that there's a lot of interesting things you can do with them. I'm a big proponent of artists being able to see, income and
Yep.
Get their artwork out to a broader audience. And as a huge sports fan, I think it's great to have sports memorabilia and different opportunities for people. So I think you're seeing more quality and more traditional players pivoting into that as another stream of revenue and another opportunity for collectors. So I think it's maturing in a good way. I think that the frothiness and just anything that was an NFT just being bought, I think some of that has kind of gone out of the market. So I think that's probably a good thing.
Agreed.
But look, these sports NFTs are great, and the art ones are, depending on what you're interested in. People are getting exposed to all these artists that they wouldn't normally have been exposed to. So I think that's like a large net positive for
Yeah,
in general.
and it's an evolution in the world of fandom, I broadly call it, right? Like baseball cards in the United States, I think it's a $5 billion market for collectibles baseball cards. And to me, this is the tokenization of that reflects some of that capability over time, not the frothy, let's flip NFTs and make boatloads of money. There's a real market use for some of these in my mind.
Oh, absolutely. Absolutely. I just think, you know, the people who took a picture of their cat and then made an NFT and sold it, you know, I'm not a cat fan, but you know,
Neither am I.
but you know, there's a market for that, and people were buying them, and you know, probably buying them at prices that didn't really make sense. And so I think that part of it has sort of gone away. And you know, you're seeing interesting NFTs come out all the time, and you know, it's exciting. It's a great way that another way to monetize what's being done in a way that's more democratized. You know,
Yep.
one of the great things people don't talk about NFTs is, you know, there's opportunities for people who like artists who would never be, you know, able to buy that art before. They weren't physically in a gallery, or they weren't in that city.
Yep.
You know, couldn't get a signed print. You know, now there's a way for, you know, collectors to buy globally and for artists to sell globally. So I think that's just a fantastic win.
Yep, fully agree with you, my friend. David, we're going to leave it there. That wraps up High Volatility Podcast Episode 2. We'll do better openings and closings. I'll have the team clean some of this stuff up. We'll bring up some charts at some point as well. Any last words, David?
You know, look, I would just say that this is an opportunity. Again, this was a theme from our first podcast, that if there are projects you like, even though the prices have retraced, it's an opportunity to build your position in it. And so I would, you know, advocate if that's something people are interested in, to really consider it.
Yep,
and I'm very curious to see where things are when we do episode number 3.
It will be interesting, but like, you and I are in it for the long haul, my friend.
Yes.
We'll leave it there. We'll post this in the WSBA newsletter. We'll post this on the WSBA YouTube channel. Thank you all for joining. Chat soon.
Thanks, Ron. Good talking to you.
Thank you, David.